Sorry about that. We're having some technical difficulties. So still waiting for confirmation on oil. We've already delivered the morning trade. We're just going over the morning trade as we got cut off here. Just going to get rid of this. So we had a sell model. We took the manipulation side. We took the manipulation move to the upside first, creating one clean leg. And then we used the NYC fair value gap. We used the NYC fair value gap as an inverse. And then push down, create another 5M fair value gap, which we just tapped. Looks like we're pushing down, still waiting for that confirmation, however. Not making any moves until we get a confirmation. So there were two entries here technically. This one obviously formed, unfortunately, during this time while we were resetting our stream. But yeah, there's 5M here. So even before that, though, the blue zone and the New York fair value gap are sitting inside of each other. So could have used that inverse, even though no 5M fair value gap was created here. So there's only two things that we use as an inverse, meaning once they've already been filled in, they're still powerful. One is the NYC fair value gap, the other is the blue zone. So even if we go above or below, the blue zone and the midpoint is always going to be a strong area. Look at this wick. One of the cleanest signs. Get rid of this. So we wicked it, not a coincidence. And keep in mind, this blue zone was painted out 5 a.m. Eastern Standard Time. And yet we knew that it was going to bounce off of here. And then we used the NYC fair value gap inverse, another 5M fair value gap here. There's a secondary entry. I did mark this out, again, we missed it. Now just waiting for most likely a bearish confirmation, retracement, and then we'll head down to these lows, which is the other side of the manipulation move. This is US oil. We're using Brent crude oil here as our divergence, just to see if there's anything else that we're missing on the charts. Let's see if this one would have delivered as well. Entry would have been right here in this 5M fair value gap on a lower time frame, of course. Stop set right here. So it's got a ways to go. Down to at least these lows. Let's see if we get confirmation on this candle. Then we'll either use this 5M fair value gap, the 20 EMA, or this zone right here. Could actually even come back up, sweep out this high, tap this blue zone, and then drop. But we'll see. Right now we're red across the board except for the 5M, which is going to cross over soon. So if we get this crossover and then tap it, I want to see some gesticulation here, enough for it to come back up and then tap this 20. The fact that we're sitting inside this 15M fair value gap, most likely going to use this to propel up, and then we'll see where it wants to turn around. But I'd like to get this bearish confirmation. If we get a bearish confirmation here in the next minute 54 seconds, and leave this fair value gap open, that's what I want to see. Don't really want to see it get past this point, even though it could. It didn't really dig into this. This is a 1M fair value gap that was marked out. Didn't really hit the consequence encroachment of it. So if we can just get that bearish confirmation here, and then maybe tap back in here and then come back down, we'll see. Let's turn our standard deviations on, see if it matches up with that low. Most likely will. Close. One standard deviation. These lows are the targets though. But now we got to make sure we get a good entry. "51 seconds left." I like this. Right now it's leaving this fair value gap open. But as I was mentioning before, these are the only two zones that I like to use as an inverse. I don't like to use every fair value gap as an inverse, as some traders will tell you. They're not strong. Not every fair value gap inverse is strong. You just use it as a confluence. But the NYC, the green one that the spotlight indicator paints out, that's a powerful, powerful zone. During each one of these sessions has their own fair value gap that's outlined. There's Asia's. There's London's. So we actually tapped London's as well. It's kind of a sliver there, a small one, but we tapped it. So we got our confirmation, and we left this fair value gap open. So this is now the area of interest. We see the market come up in here. Tap the 20 EMA. Let's get this crossover as well. It looks like it's on the verge. and we got a lot of room. This would be a really good setup. I'm going to keep it right above this fair value gap just in case, because it could come back up and tap it. And then I'm going to aim for 1 standard deviation, which is 3R, even though the lows are right down there. Always aim for the low-hanging fruit. Now we just got to get this reversal, this retracement first. Right now this setup's looking nice. But keep in mind, still inside this 15M fair value gap. That's why we want to proceed with caution. And we did have a slight upside expansion model with oil. I'm hoping it uses this 15-minute as another manipulation for people that think, hey, it's going to go long from here, but in reality, it's just going to go up in here and push down. That's what we'd like to see. Don't want to see it run away. Slowly getting that crossover now on the 20 EMA. We're right across, we should be right across the board right after this. This is looking like a nice setup. But I want to see it again. Tap in here. We are on the verge of leaving another fair value gap, so we got to proceed with caution. I still like this one more. I want to touch that 20 EMA. Remember, as soon as we get a crossover, the market is now pulled back and drawn to these EMAs like a magnet. Now these EMAs could get down here into this fair value gap, but right now they're sitting in here. Okay, so we did leave this fair value gap open, so we got to be cognizant of it. Could touch this and run, but ideally we want to see dig a little deeper and tap here. Body could close here, but I want to see a tap at least the 20 EMA. Also keep in mind that we did close, this candle closed within this 15M fair value gap. So we just got that crossover. Now we're red across the board. This is slowly becoming a high probability trade setup. Remember, you need a foothold. Do not jump into an unanchored trade. An unanchored trade is one where you do not have a stop loss. You don't even know where your stop loss is. And you enter outside of the confirmation itself. This is unanchored. Wait. If it takes off, it takes off. That's fine. You can only get on get onto a ship when it's anchored. Otherwise, you'd be chasing it down. Really quickly here on, let's show you NAS and show you why we avoided it. I didn't even have to look at NAS to know that I needed to avoid it today. Remove some of these drawings though. Actually. So we're sitting inside of an NWOG, new week opening gap. We had a sell model. We manipulated up, but we double broke up. Get rid of some of these green lines. So our low is all the way down there, manipulation move, and our high is right here. So we broke it here, took that high, broke the bottom of this, had a double break, but we've already taken out London highs, Asia highs. So then it spent the rest of its time retracing back to a blue zone. Now technically, since we have a double break, I believe we double broke right into a higher time frame PD array. I believe there's a 1 hour fair value gap here when I took a look earlier today. So remember, anytime you double break into a higher time frame PD array, the market could reverse. You got to be careful. So I want to see oil hold up here, maybe consolidate a little bit so it gives the EMA's time to pull down just a little. Then it taps the 20 EMA, body closes below this fair value gap. Let me look for a 1M entry. That would be the best setup. Right now it's extremely, extremely bearish. Wants to just continue running, so you might have to let it. So we did close outside that 15M fair value gap. We did violate it. Let's see if we get that retracement here now. We're at 11 o'clock. 30 minutes left in our stream. $20 EMA slowly moving outside of this fair value gap now. I like this fair value gap because it's also right at the consequence encroachment of the 15M, so it could use this as an inverse, just a second point of confluence. Slowly making its way up. Right now this is the area of interest. Just want to see that 20 EMA get even close so we can wick the 20 EMA, body close here. And we push down to 1 standard deviation. That would give us a nice 3R. Maybe a little lower because we might not hit it all the way up here. 2.38, but then we could just extend this to those lows. 2.71 still. Still just patiently waiting. NAS here on the right. Just taking a look at it again, not interested in anything NAS has to give us today, but we did get that double break. We took out all these lows. Remember, anytime you get a double break, you retrace back to the blue zone and look to continue in that direction, but we also hit a higher time frame PD array. That's why it just stalled here, pushed down. That's why I'm not interested in this market today. Could just continue up, but this is the more high probability trade setup right now. That 20 EMA slowly making its way down. That's exactly what we wanted to see. Here we go, getting close to it now. As soon as we tap it, I want to see it touch that 20 EMA though. And we'll drop down into the lower time frame and look for a similar setup. Remember, hit a fair value gap, create a fair value gap. I want to create a bearish 1M fair value gap after we tap that. Okay, we've tapped it. Nice. Nice wick. It could go a little higher. Let's see if we can touch that 20 EMA, maybe even this fair value gap. I think it still might want to take one more sweep up. Didn't quite touch the 20. It's within range. But let's see if it gives us a bearish fair value gap here. Still around that 20 EMA on the 1M. Let's see where the 20 is. I'll just make a line. It's heading right around here. Still no bearish fair value gap created. We'll create it on this one because we've already tapped here. As mentioned before, I'd still like to see one last run up. The more confluence, the better, especially on a day like today. NAS now above that second blue zone. So even though we're not trading this, let's see if it sticks to our strategy. A double break back to the blue zone for an extension to the purple. Let's see if that sticks to our strategy at least. Not interested in actually trading it though. So this is actually a good sign. We haven't gotten a bearish fair value gap yet on the 1M, which gives it time to hit that 20 EMA maybe. Getting closer and closer in range at least. We'll most likely hold it up here a little bit. Let's see. This is why you wait. This is why you wait for all confirmation. About 18 minutes left in our stream. I'd like to see it come back up and hit this zone where the 20 EMA is on the 5M. But if it gives us a bearish fair value gap first, I'll just keep my stop loss above that though. I don't like this wick. I don't like the fact that no candle bodies closed in here at all. That's always a sign that it does want to take one last run up. It likes to violate fair value gaps before pushing down. Rarely will you see a clean wick and then push down. But let's see. Patiently waiting. Still no 1M fair value gap created. If anything else, could use this bullish fair value gap to do one last run up. If we get a bearish fair value gap and we close below this, we have a candle body closure below this, I'd be interested in taking that 1M fair value gap. Does drop our risk to reward. $1.24, so it might not be worth it. But let's see. $2.53. Let's see where that 20 EMA is sitting now. It's pretty much right at the low, or the highs here, right at that line, the red line. Okay, this is good. This is what we wanted to see. Okay, so we've officially hit that 20 EMA. Now I want to see it push through and close down here. Let's see if it closes under the 50 EMA on the 1M or if it wants to take one swipe up here at the 238. Might be heading all the way back up to this 5M fair value gap. So we violated this one so far. 4, 3, 2, 1. So now we're definitely heading up into this one. About 12 minutes left in our stream. Let's see if we can't see that rejection and bearish setup. Okay, now we're inside that fair value gap. Pushing past it. About 9 minutes left in our stream. I'd like to see it hold. I like to see this fair value gap hold. I don't want to see it get past the midpoint of this. Otherwise, it might not give us our trade setup. It might go all the way up here, tap that blue zone, and then start heading down. Which would be a little late in the game for us. Remember, our approach is also a time-based approach. We want to make sure that we're in a high probability trade setup 1 hour after range formation. Anything after that, there's going to be a lot of manipulation happening and a lot of like wasting people's time. So we don't want to be a part of that. It's got 8 minutes to start pushing down. Otherwise, if it just continues up, we're not interested. Which is a shame because this was a really nice setup. We're just waiting for all points of confluence to match up. This is actually really good for our risk to reward, but we need to see a bearish fair value gap set up first. We're getting a crossover here on the 1M. We're green now. Seven minutes left. So we've already violated this fair value gap. As mentioned before, I don't want to see it get above this midpoint, even though there is a fair value gap up here as well, and a blue zone. It's too deep of a retracement. About 5 minutes left. About 4 minutes left, still continuing up. Just going to move up to the 5M now. So there's no other 5M fair value gap in here. So this was the original 5M fair value gap that we used to push down. This was actually a 1M fair value gap. This created at least one gap here. 2 minutes 50 seconds left in this candle closure. Let's see if it creates another fair value gap here. Could be heading up to the blue zone before pushing down, which is past our time. I don't think we'll get that bearish setup. Ideally, we'd like to see it just start dropping from here, but let's see. So this is our last candle. We'll conclude after this. Yeah, it looks like it still wants to, continue pushing up. So please check us out on fractaleffects.com, where we teach high probability trading. We'll be live again tomorrow, but again, keep in mind, we have CPI, PPI, so proceed with caution. If you are going to be trading, make sure you do in a demo account. Make sure you're practicing properly. Check us out on our Instagram, fractal.effects. Make sure you hit that subscribe button, turn on your notifications so you know when we're live. And again, we apologize for the streaming issue this morning. Everything just ceased up on us. We had to reset. We'll take a look this week to make sure we can avoid that going forward. 15 seconds left. Just gesticulating here still. And that's our last candle. So we'll conclude our session there, and we'll see you guys tomorrow. Have a good one.